to see the markets nice and green after a long time. Going forward, today is going to be big, two big bits of news. Of course, that interest rate hike finally to be announced, and also FN expiry. What are you looking at? Are you looking at markets to shoot up, rally post that announcement?
Well, actually, we have been in a short-term uptrend since quite some time, and I don't think this interest rate hike or even the FNO expiry will play much havoc. I think a 25 basis point rise is already pretty much factored in, and it's unlikely that the hike will be of a larger amount. And as far as FNO expiry goes, I think it's all pretty much done before the last day. So I think the short-term uptrend should continue from here. I mean, we see no signs of a reversal as yet.
All right. So that is pretty much built in right now. In FNO expiry also, it seems that the worry is over. But let's now, as promised, get you our young investors in generation next. Right, our guests today, Jatin Jain and Anshul Sharma, both joining us from that Mumbai studio, and investors, in fact, very young investors we got today. Jatin is 18 years of age and Anshul is around 21 years. Just to tell you, Jatin's wearing the blue shirt there, so we'll get a closer look and talk, of course. Let me go across to you first, Anshul, and let's just talk about, I know you're 21 years, you just finished your BCom, but and you're studying for your CAT exam, I take it, in November. But how did you really get into investing and trading?
Well, it's a long story, but I'll cut short. And it was my dad who 5 years back came to Mumbai, and he started investing in stocks during the technology boom. Then he lost quite a bit of money in that because of the bubble got burst. Then it was me who used to watch the television regularly and see the stocks, how are they performing. Then I've seen those 2 years of bear market, and then finally with the God's grace, I've seen 3 years of bull market. So it was my dad who pushed me into equity markets, and then I started following it quite regularly.
Right. Anshul, did you get worried when you saw that kind of correction happening in IT stocks? Did you think, okay, the IT story is over, let's just move out of it?
Well, not exactly. I never used to follow markets before that, but when I got to know the entire story about the tech stocks, then people were saying the rally is over for the tech stocks and all that. But then I considered that the valuations have become really very cheap, and now one can look at buying big companies like Infosys, Satyams and Wipros of the world. And there was a news that TCS might come out with an IPO, so there was a re-rating in the sector as such.
All right, so TCS, and I know that a substantial portion, we'll discuss Anshul's portfolio in just a moment, but a substantial portion does consist of those IT heavyweights. Jatin, thanks so much for joining us as well. Tell us a bit about yourself. What's your story been? How did you start investing in the market? Because you're very young, 18 years.
Yeah, actually I was very much curious about the markets during my school days. So like it was very too much early for me to like start investing in the market. Like I was not sufficient to take such a high risk. So like I started, when I came to the junior college, I started participating in many of the what you call inter-colleges events, which mainly like in the equity, which have inter-college events in the equity. So I started playing in the inter-colleges events and started winning and getting the track of the market. So from there I started learning the basics of the market, and now I manage my dad's portfolio.
Right. Jatin, let me just ask you, what are these equity events? What's it like? Is it like virtual trading? You play with money? How does it work?
Yeah, it's in virtual.
Okay, we'll get that perspective just now, but let's just go to our analysts also and discuss this with them. Let me go, Bhavin, first to you and talk about that IT-centric portfolio that Anshul seems to have. We'll get Anshul's portfolio in just a moment up for you as well. But around 40% of his portfolio is in those blue chip IT heavyweights. Do you feel that this is a right time to perhaps further invest in IT because we've seen the rupee really depreciating. So obviously dollar looks good for IT companies at this moment. Are you all right with this portfolio? Infosys, Satyam, TCS, really the big boys of the blue chips.
In fact, I'm very happy to see Anshul's portfolio at this age, because being young and being starting early, it is very easy to go towards momentum stocks and daily trading and get into B or C grade stock. So I believe Anshul's portfolio is very good. He should hold on to those stocks. And in fact, after the interest rate hikes which are happening globally, rupee depreciating, and a big order book for this IT companies. In fact, there is substantial scope for more P rating, at least for big boys in the IT sector.
All right. So great words coming in there of encouragement, really, Anshul. Nice portfolio. Bhavin's really happy with that. Tell me about the rest of your portfolio. What does it really look like? Because you did mention some mid-cap stocks also that you have.
Yeah, I'm interested in sugar stocks. So I bought Triveni Engineering. It's into the sugar business also, and wind turbine and something like that. So that's an interesting space, and a bit of realty stocks. I bought Unitech. Well, that's a big story. It used to go up 5% every day on the upper circuit. I never got a chance to buy it, but one fine day it came out of circuit, and my price got executed.
Yeah, what price did you finally manage to buy it at, Anshul? This was, I assume, before the stock split?
Yeah, of course. I got it at 7,400
Right, not bad.
before the split and the bonus.
All right, that's not doesn't seem like too bad a stock price, but that's an interesting story. Hormuz, a lot of people, in fact, had the same problem. Buying into Unitech was a virtual impossibility because the stock would hit that 5% upper circuit every day, and then when the markets corrected, the stock would hit a lower circuit of 5% every day. So Unitech and Triveni Engineering, are they good picks? Really plays in that mid cap space?
Well, actually, a lot depends on, I think, how the broad market continues to function. I mean, there are some fears that we could be in a slightly, longer term downtrend, and prices could come down a little. But then, if you look at a little longer term, I think the India story holds good. And if you're willing to hold on, if you're willing to ride out these relatively shorter term dips, then probably it makes a lot of sense. But again, these are stocks which have gone up quite a lot in the last 3 years, maybe I don't know, maybe 20 times or so. So the risk is very definitely high. I mean, if the broad market does continue to decline, these are the stocks that could be hit the most.
All right, so obviously volatile there. Let's go to Jatin now. Jatin, let me just get an idea about what your portfolio looks like, and what do those virtual trading games prepare you to really buy?
Like my portfolio is mainly, like, a large allocation of my portfolio is into oil and gas sector.
All right.
So like I'm quite worried. I'm quite worried about my portfolio because, like, most of the brokerage houses are negative on this oil and gas sector. So like I would like to know, like, how which company should I exit from my portfolio. Like I have all the blue chips, ONGC, MRPL and Reliance, and even RPL in the latest issue. So I would like to, like, know which stock should I exit from these four companies.
All right. And Jatin, interestingly, you did buy all these at their IPOs, I take it?
Yeah, yeah. All of these are at the IPO rate.
Okay, interesting buys there, but he's managed to pick up some fantastic counters at the IPOs. Let me go across to you, Bhavin. The big worry, of course, being that it's oil heavy. His portfolio is oil heavy. You see Reliance constituting around 40%, RPL, he's got 7-8% there. He's got ONGC around 18%, MRPL also there as well. Now, what should he do? Because we've seen subsidy burdens happening. The crude oil prices seem to be hovering around that $70 to $72 range. What should he really do?
I think though his portfolio consists of all blue chip stocks and good stocks, all are having good growth plan, I think he has put all his egg in one basket. And basically oil and gas sector in India is still dependent on government for subsidies, and often there are too much of a policy changes. So obviously this sector will always remain volatile. So I think he should trim his portfolio exposure in oil and gas to less than 25%, and obviously diversify across some other sectors also.
All right, so Bhavin's views coming there. Jatin, he's advising you to trim it to around 20 to 25 from your earlier around 60%, I think, is part of your portfolio in that oil and gas space. Well, what about other stocks there? ONGC really, what made you buy there? And is there a focus on some of them I notice are sort of dividend yielding stocks?
Yeah, like ONGC is a good dividend yield stock. I think for FY06 they declared a dividend of 450%. So ONGC is a good dividend yield stock, but it doesn't have a good momentum. It issued a IPO at 712, I suppose, and now it's trading around 1000. So it's not a good momentum, but yeah, so I would like to shift from ONGC mainly because of that it's a low momentum counter, and I would like to shift my portfolio to little bit of mid cap and small cap.
All right, let's get Hormuz in for that. Hormuz, what would your recommendation be? Because dividend yield stocks typically they don't rise as high as the market does, they don't fall as steeply as the market does either. But going forward in mid cap, which ones would you recommend Jatin to pick up?
Well, actually, the mid caps and the small caps are looking the most dangerous at the current time because if a downtrend does materialize for the market, I think these are the stocks which generally take a hit, and then they might not even bounce back in the next bull run. So I think he's a lot safer if he sticks to larger companies. Yes, he may diversify out of oil, but I think it's important that he remain within the A group because the mid caps and small caps, like I said, just tend to disappear in a bear market, and the risk and the loss can be quite substantial.
Okay, so views coming in there by Hormuz. Anshul, let me just ask you one final question. I notice you have a lot of power stocks also in your portfolio. You've got Siemens, NTPC there. You have steel stocks like Tata Steel as well. Are commodity prices being a concern for you with those sharp sort of run-up we've seen in the LME metal prices?
That's what my question is to the analyst there, that if the commodity prices, the copper, aluminium, zinc that they are trading on the London Metal Exchange, and the NYMEX crude, if the commodity prices continue to rise like this, can this have an impact on the Indian markets also? And can the what US Fed Reserve is doing, raising interest rates every now and then, can the Central Bank of India, that is RBI, can also take a step, and because of the rising commodity prices, can RBI also start raising interest rates, which could of course dampen the corporate earnings and profits going forward?
Fair enough. Really the concern of the moment, Bhavin, I'm going to put that across to you. If RBI hikes those interest rates, corporate growth might be slowed down because people can't get those loans at decent rates. They probably don't want to then expand so aggressively. So we'll see entire corporate earnings coming down in the subsequent quarters and perhaps a slowdown of the economy.
We don't believe that. I think it can substantially slow down in the economy because one thing we have to remember, all these commodity companies, say 4 or 5 years back, had implemented their capex plan when interest rates were as high as 16 and 20%, and now they are just 7.5, 8%, and we are talking of a hike of hardly 100 basis points say, over a period of 1 year. So I think that and way the commodity prices have moved internationally, and if you see the margins of say steel companies or non-ferrous companies are hovering about 20-25%. So I think 100 basis point hike in interest rate cannot adversely impact the plans of these companies and profit growth.
All right, so those are views. No big concern right now. But at this point, let me thank Anshul and Jatin, both of you young men, for joining us on the program and discussing your portfolios. Really very seasoned investors with a substantial market knowledge. Very young as well, 1821. It was a pleasure to have you on the show with us. Thanks very much. Well, let's now take a break, a quick break. But let me tell you what's going to happen after the break. We're going to get you an exclusive view coming in from the Economy Minister of Luxembourg on this entire